Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today's Thursday. It's August 3rd. Summer is almost over. It's time for kiddies to go back to school. It's about 7:51 in the morning. Market's going to gear up to open up in about an hour and 39 minutes. Welcome, welcome, welcome. Now, before we get started, make sure to like this channel if you're watching on YouTube. It's the YouTube Wealth Press channel. I upload the video up there personally every morning around 8:30ish. Number one. Subscribe to our Telegram channel. I put free trades there sometimes for you. You'd be nuts not to subscribe to it. It's rogerscott.com/Telegram, and the link is also below this video if you're watching on YouTube. Most importantly, I've opened up my VIP room for the summer for all of you guys. It's like the second part of this video live. You can ask me questions, all the good stuff. Make sure you come in there. It's happening today for the last time on Thursday at 10 a.m. We're moving Thursday to 11 a.m., so it matches Friday. Anyhow, 10 a.m., don't miss out. And lastly, most importantly, comment below these videos. I want to respond to you. I want to know if you guys are watching. All right, let's get into it right now. So just to give you an idea of what's happening right now in the market, the Nasdaq is down about 66 points, continuing yesterday's rout. The Dow's down about 55. Nothing major, but this is concerning. This is primarily caused by the bonds basically falling out of bed and the U.S. government, well, not the U.S. government, a company downgrading U.S. government bonds to I think AAA from 4As or to AA plus from a AAA. Yeah, two and a half pluses from a AAA. Not a good sign. Not a good sign at all. But most importantly, there's a lot of stuff happening technically that I want to talk about with you guys. Really important stuff. So first of all, the bond market, this report has been very, very negative for the bond market. It appears that U.S. economy is losing steam. That's very, very bad, and that may cause interest rates to go higher, which causes bonds to go lower, because if our ratings are lower, that means there's less demand for bond, which means they become more expensive. Yield becomes more expensive to drive prices of bonds, so investors find them more attractive. So anyhow, the next resistance level is the next support level. I mix up resistance and support all the time because I'm talking about both of them. Is actually near the 91 level. It's quite a bit. We're in a falling knife right now. Usually when we're in a falling knife, we got more to go. About 91.5 is our area right here. As you could see here, we've been in this range in the bond market all the way since beginning of the year. So it's been about 7-8 months, about 7.5 months, give or take. But we're finally breaking down. This is not good for tech stocks because when yields rise, when interest rates rise, tech stocks usually go down. Speaking of tech stocks, and folks, I want you to remember something. We've got the biggest, combined total, the biggest market cap of any stocks coming out with earnings after the close today. Apple, it's breaking down right now. If it breaks below this level, we're in deep doo-doo. We're in deep doo-doo. And remember, this sucker's been going up from beginning of this year, straight up nonstop. So be very, very cautious. The next stock is Amazon. That's coming out with earnings after the close today. And again, I'm not really happy about this price action that I'm seeing here. This is not happiness for me. Matter of fact, these descending triangles look like they're going to break down. Now, some confirmation that what I'm seeing is not crazy. Look at the QQQ right now. You have a descending triangle. It's already outside of the descending triangle. Look at Microsoft. I was really bullish on Microsoft. I thought it was going to stay in this channel. It's breaking down. And it looks to me like it's a swing peak. Like we did it here, but we tend to bounce back. We're outside of this channel for the first time. How about the SPY? Look at the SPY. Remember I told you the other day, it's at a critical resistance level. We're breaking down, and the next target is right here. Literally right there. So you have a while to go. How about the Dow Jones? Look at the Dow. Same thing, hitting off of this long-term resistance level. How about the Russell? Let's look at the Russell. Same thing. This is making me very, very nervous. Now, we could have a reversal and have this come back up. I mean, this trend is very strong. But with this downgrade and with earnings not coming out as well as expected, I'm not seeing it. Also, stocks that have been holding up really, really well, like NVIDIA, they're going back into that channel that I told you about. I thought once it goes into this channel and it makes a high, it's going to come back down. It hasn't done that yet, but the night is still young. So if semiconductors continue breaking lower, let's look at SMH. That's the index that tracks semiconductors. If index continue breaking lower, it's going to be right here. If they break this line, it's going to be very, very bad. It's going to be very, very bad for the broad market because the broad market is 50% technology stocks. And you remember when the AI rally happened? Remember how it all boats tide, lifts well, it works the same way to the downside. So be really, really cautious right now because we're approaching some really, really nasty levels. Not that they're nasty low, but they're critical levels, because if we break these levels, we could be going down for quite some time. And the fact that the bond market is no longer cooperating, that's very, very bad. This is putting a lot of pressure on the stock market, and it can go a little further. It can go all the way from 95 to 91. So be really, really careful. It appears to me like this upside that we've seen that's been lasting like 3 or 4 months right here, from here, is coming to an end, and we need to revert. And I warned you. I said, look, the market's not making all-time highs. This is a bear market rally. I think we're going to come right back into this range, actually. So be very, very, very cautious. Now, earnings today, Amazon, they're expecting 6.5% move one way or the other or both. Apple, not a big move. Budweiser, Coin, Square, AB&B, DKNG, Expedia, Net. I mean, these are all coming out with earnings today. So there is definitely going to be a heightened sensitivity to technology stocks, especially consumer discretionary stocks, because Apple and Amazon are technology and consumer discretionary. So we're going to have to keep an eye on XLK. I would not want to be long XLK right now. See, the technology sector, it's already breaking down. It's already below that level. It's breaking down right now. And again, the next level is right here. I hate to say I told you so, but I've been talking about this for quite some time. This rally lasted longer, but look, we're breaking down. Breaking down. That's not good. So in terms of economy, not much driving the market today. I mean, you've got jobless claims, you've got PMI, factory orders, but honestly, last week's data was pretty instrumental. Earnings is what's driving the market, and the bond market. Tomorrow you have the big employment data. Not expecting anything major. Let's talk a little bit about what to expect from the broad market, global economy, and kind of put everything together in a bow tie and tell you the best ETF, because it's Thursday. I tell you what the best ETF is. And if you wait all the way till the end of this video, I'm going to give you a few day trading stocks that may be really moving today. So let's talk a little bit about a review. U.S. bond yield hit a 9-month peak. While market participants are looking ahead to earnings report from Apple and Amazon. Told you about that one. We're now at a 2-week low on the S&P 500. Nasdaq is at a 3-week low. AMD slid 7% after expressing good earnings, but they're expressing concerns over their target for artificial intelligence. That artificial intelligence is going to work both ways. It's not as hot as it was a month ago. And guess what? There hasn't been any new technology or new AI stuff going on. Rate-sensitive mega-cap stocks tumbled after the 10-year climbed to an 8.5-month high. Not good. Tesla dropped 2%. NVIDIA, keep an eye on NVIDIA. It's a chip stock. Devon Energy fell. They had downbeat results. Not good for energy stocks. ADP came out 324,000. It's been really off the Friday's report, so I'm not putting a lot of effort into that, and neither is anyone else. We got a huge earnings spurt today. Apple, Amazon, ConocoPhillips. Keep an eye on energies. Amgen, Bookings, Guild, and Airbnb. You got ISM non-manufacturing data coming out. Losers and tech stocks are leading the overall market lower in Europe right now. They're keying off of U.S. China closed higher after a private survey showed that the service sector is country grew more than anticipated. Yeah, don't hold your breath. Data on Thursday showed that their service activity expanded at a slightly quicker pace, driven by a surge in business during the summer travel season. Great. At the same time, Morgan Stanley downgraded China shares to equal weight on Wednesday. They just can't get a break. They really can't. Japan, sharply lower, tracking overnight losses. They're following U.S., and as a rise in yields in both U.S. and Japan dampened investors' appetite for equities. I think yield is going to be going up in Japan for a long, long time. I don't think it's a temporary thing like U.S. I think they're going to see it for quite some time. Movers, pre-market movers. Qualcomm, down 8%. More pressure on chip stocks. PayPal, down 8%. They have earnings. Not good. Etsy has earnings. Not good. Upwork had earnings, and they were better than expected, actually. And I will talk about that stock in a minute. Roku fell a little bit. And as you can see here, what is not reporting today? Keep your eye on Apple, Amazon, Conoco, and Amgen. But I am not really happy about this market. Now, let me give you some ETFs and some advice. Now, cumulatively, this is the short-term sector scan. Cumulatively, energy is still leading and communication is following. And Russell 2000, Financial, Dow, this is very mixed. This is very, very mixed. It's very hard to make heads or tails out of this because communication is all the way up here, technology's down here, QQQ's down here, and consumer discretionary. So out of technology, the only thing that's holding up is the communication services. And if today Amazon and our friend Apple drop, I promise you communications will not be up here. But I digress. Let's look at it on a 6-week basis. 6 weeks basis, you've got energy, financial, small caps, mid caps, industrial, basic materials. So over the last 6 weeks, tech is not really leading. Tech is consumer discretionary, technology, and communication services. Still communication services. Over the last 3 weeks, consumer discretionary, technology, communication services, not even close. And last week, communication services really rallied. QQQ really rallied, but consumer discretionary did not. My advice is to stay away, unless you're going to be shorting, stay away from communication, consumer discretionary, and technology and the QQQ right now. The money's been moving into, last week, into utilities, real estate, don't touch consumer discretionary, healthcare, and financial. The 3-week is a good guide, kind of a broad figure. The Dow is still the strongest one. Consumer staples are starting seeing some upside, and healthcare. Energy, financial, Russell 2000. Notice, don't go into technology. Now, graphically looking at this right now, Dow Jones looks like it's having a nasty day, but Dow Jones is still in play. Consumer staples I really like right now. Energies I really like, except for the earnings. S&P as a whole is coming down. Russell is coming down. Financials are coming down. Mid caps are coming down. Notice everything is coming down, but look how good industrials are holding up right now. They're holding up better than everything. Look at it yourself. Industrials are still in that range. That's where I would be focused right now. Industrial stocks, industrial. And if you look at the spread here, let's look at industrial over the average. Industrial is right here. It's in the upper end. Let's look at it over 6 weeks. Industrial is in the upper range. Let's look at it over 3 weeks. Industrial is, where's industrial? Industrial's down here, and over the last week, industrial is back up here. So I do like industrial right now. I do like industrial quite a bit, and I like consumer staples. So let's look at both. XLP, consumer staples, looking good, but kind of choppy. And let's look at industrials. Oh, that's basic materials. Sorry. Always confused the two. This one's still looking pretty good, and it's getting oversold right now. I would be going with industrial. Relative strength never lies. Let's look at some options. We're talking 43 days out. You can get the 110 strike price about $250, $270, or the 111 about $2. And if nothing happens in about 2 weeks, get out. Implied volatility is not high either, so it looks pretty good here. Now, before I let you go, I told you I want to give you some stocks that are moving up, small caps that are moving up. TR and R, this is one of them. The stock is up right now about 8%. Maybe a good short, maybe a good fade. Another one is Cook. These are stocks that are really moving, which means there's opportunity for day trading there. Cook, that's another one. Another one is Upwork. We talked about this briefly. It had really positive numbers come out. It's up here. But again, if the market opens and this stock starts coming down, it could be a great short. And to the downside, we have AMSC. Look at this stock, already down in the base. So watch these stocks closely for big moves, because those are the big day trading stocks for today. Now, if you look at just about any stock ticker, you can find a unique pattern, which I call the M spike. And I just held a special workshop teaching traders how to spot and trade it, also covering how to avoid analysis paralysis, the 4-day flip strategy, 12 top performing M spike tickers. Yes, they're included. 5 popular chart indicators and more. You can get special access to this training 100% for free just by clicking the link below. Don't let this opportunity slip you by. Become a smarter, more confident trader today. Follow the link below. Check out the M Spike. You guys are going to love it. And there's a lot of value in this training session. I'll see you guys later. Make sure to like this video, subscribe to this channel, comment. I want to hear you comment. And subscribe to my Telegram channel. Bye. Have a great Friday Eve. Bye.